afternoon. Happy Friday. This is Sean LaBelle of the Dekker Hewett Group. It was a mixed week here for most North American benchmarks amid a flurry of news. We've kicked off Q2 earnings season with the U.S. financials. We also had June CPI inflationary data come out of the United States. And of course, the Bank of Canada was on deck with their own interest rate hike of a full 100 basis points, the highest rate hike that we've seen since 1998. So this week's Market Watch Weekly is going to focus on that CPI or inflationary data. It's important to remember that CPI is a lagging indicator. It represents what we saw in June. That number came in at 9.1%. It's considerably higher than the 8.9 that economists were expecting. But what we've seen in recent weeks here, and most definitely in the month of July, is that most of these major commodities have really pulled back. And there's a couple interesting tables in this week's Market Watch Weekly that just illustrate the pullback in some of the metals out there. So it's important to remember that these are probably the first sources of the inflationary pressures that we did see at the beginning of the year. Well, the Q2 pullback in some of these was extreme. And so much so that a lot of these now are actually down double digits on the year. So that isn't necessarily reflected in the June inflationary data. Oil, meanwhile, is obviously one that's very topical amongst investors right now. That peaked at around $122 a barrel on June 8th. Well, currently today we're trading around $96 a barrel. So that, again, that inflationary data, that 9.1% that we did see, that's for the month of June. It's not going to be that high for the month of July. We can almost guarantee that. So this week's Market Watch Weekly, like I said, really focuses on our inflationary conversation. Again, I apologize. We've talked about it a lot this year, but obviously that's going to be dictating the direction of the markets, because that means that central banks around the world might be able to be a little less hawkish in terms of those interest rate hikes. Again, we saw that with the Bank of Canada on Wednesday going a full 1%. So hopefully we start to see that inflationary conversation really roll over. A lot of the indicators out there would encourage that as a thesis as well. So we talked about that extensively. There's also a couple interesting tables that just speak to the historical volatility that you do see in the market. It just looks at the interesting drawdown that you generally get in a market any given year. And then, of course, where you finish off. There's also an interesting chart in there that looks at all the sort of events and crises that we witnessed in the market in the last 50 years. And yet the S&P has managed to get all the way up to a new all-time high just at the very beginning of this year. So we encourage you guys to take a read and a look. Hope everyone enjoys the weekend, and we will talk to you again next week. Cheers.